Hi everyone, this is Drew Orton from Nimble Leader. Almost always, we work with senior leaders of mid-market, mid-cap companies to find short-term improvements in both revenue and profit. On the cost side, we seek to identify low-hanging fruit. Recently, Ed Flanagan, a Nimble Leader core team expert on cost reduction, found over $1 million on freight savings for a furniture assembler, with almost no time involvement from the senior leadership team. Right now, everyone is stretched thin. What follows this introduction is a short pre-recorded briefing where Ed shares some of his tools to both benchmark and quickly identify short-term savings for companies just like yours. Take a listen.
Ed, recently you shared a 2021 BDO study identifying 73% of all manufacturers are at break even or struggling, with 40% indicating that they have insufficient cash. That's really significant. I know you're a cost reduction expert. You have often said that companies frequently overpay suppliers 10 to 30%. Why is that the case?
Drew, what we found is that just like anybody in business, the supplier's goal is to win your business at the highest possible price and margin for them, and to make it very difficult for you to get the lowest price. And we find that our clients don't have the knowledge of the supplier industry, and they don't have the benchmark data, and they make it difficult for our clients to get the best prices.
Okay, so that really makes a lot of sense. And you've also spoken about the top 10 procurement misconceptions. What do you see most often when you're working with your clients?
A couple examples is a lot of times our clients are very loyal to their suppliers. They've been, with the supplier for 5, 10, 15 years. They give them great service, but they don't have the time to negotiate with them on a timely basis. And we had an example recently where a company was spending a lot of money on their printing supplies, and we came in and they said that they had not had an increase in 5 years. And based on the technology improvements in printing, we're able to go in and save 62% on that category. The other thing we find is that the lowest price does not always mean the lowest cost. So if you get a deal, let's say 1,000 units at $1,000, but that provides you 5 years supply, is that really a savings? The other thing is their purchasings will not always ask the right questions when they go out with their RFP. Are they asking for rebate opportunities? Are they asking for prebates? And we find that in 90% of the cases, companies will commit one or more of these misconceptions, which lead to the overspending of 10 to 30%. And there can be a very significant opportunity for us to save and find hidden cash flow opportunities.
Okay, so I'm actually just blown away by that in 90% of the cases of the folks that you work with, that these companies violate one or two of these principles, right? And so there's significant savings that can be had with the business without any change in strategy. So I think that's pretty incredible. You've also spoken about the path to excellence. Can you share some of your core insights relative to what you're referring to there?
Yeah, through the path to excellence, we've got a setup of 10 best practices. And one of them is if you're going to go in and review and try to save money, the first thing you've got to do is analyze and validate your purchase history. So our clients are thinking, why do I want to spend all the time doing that? I've been here all year. I know what's going on. And we have to do that when we get engaged because we weren't there during the year. And we have some examples where we came in and we had a client that had 9 different locations, and they were getting the same service from their uniform company, but each one of those 9 different offices were spending a different price for the same service. We had another client that for 10 years was getting charged for 2 T1 lines that had been canceled 10 years ago. And the problem there is that the IT department did inform accounting to adjust the budgets. So this bill kept coming in year after year, and we got involved and were able to find them 90% refund from the telephone company. The other best practice is you want to understand the suppliers in their industry. You need to understand what's going on. It's impossible for most of our clients to understand what's going on these levels. Another one is you want to reevaluate your current supplier relationships. And the thing is, you never want to have a person at the organization that has the relationship with the supplier, the one that goes to the Eagles games and goes to like golf outings. They should not be negotiating with the client And we have a good example. We had a big manufacturer as a client, and we started talking to them about opportunities, and we found out that they were spending a lot of money on their freight, especially with FedEx. And they had told us that they had just gotten back from an outing where the FedEx representative took three of the company personnel out to Scotland for a nice golf outing. And once we heard that, we knew that there was a lot of margin in this category. We went and we negotiated with FedEx, and we found 30% savings in that opportunity. So the thing is, most companies do not have the internal supplier industry knowledge to effectively implement and monitor the variety of their indirect spend. They seem to concentrate more on direct spend. So suppliers count on this lack of oversight, and over time they find ways to incremental price increases through a variety of means.
I think that's really important. So we talked about earlier, that companies 90% of the companies violate one or more of the key principles. And I think the key takeaway for me here is that not everybody can be expert in all things, right? So if these companies are expert in their, let's say, direct costs, they're definitely not expert relative to indirect costs, and that's where you step in. So I think that's really, really important. Now, Ed, you've developed a simple tool that allows companies to easily compare their spend data across approximately 30 indirect spend categories with benchmark data that you've derived from 20,000 expense reviews over 25 years. Can you take just a couple minutes to share with us that tool and what we can do with that?
Sure. Okay, as Drew mentioned, we look at 40 different non-direct, non-salaried expense areas. And we've come up with benchmark savings in different areas. So you can see here in courier service, we average 20% savings, in chemicals, 18%. So this Excel spreadsheet will allow you to input the annual spends for various categories. And once you put a spend in, I'll give you an example here for, let's say, copiers. If your annual spend, let's say, is $100,000, and we average 28% in that category, that means on an annual basis, you would find $28,000 in savings. And if you looked at your multiple and you wanted to see what the effect of that $28,000 would be on the value of your organization, your value would go up $280,000. So the multiples can be adjusted, and multiples can average anywhere from 5 up to the mid 20s. So depending on what industry you're in and what multiple, you can adjust that from 10 to whatever you want to put in there. So as we go down the spreadsheet and you look at the different expense areas, and let's say you're spending $1 million in freight and our average savings is 18%, your annual savings would be 180,000, and your value would increase by $1.8 million. So if you keep going down, we'll put a couple more. Let's say your uniform spend is 50,000, and you're paying you have $500,000 in utilities. You can see that in this case, your annual spends would be $1.6 million at an average savings of 15%. You would be able to recoup $244,000 in additional hidden cash flow, and the value of your organization would go up $2.4 million.
Okay, so that's huge. So I think what I hear you saying is, look, you've got this capability. It's been developed over 20,000 expense reviews, captured over 25 years. If I'm a CEO for a business, I might hand this off to the CFO or controller, and theoretically, they should easily be able to punch in those numbers and see what the potential savings could be. Would that be correct, Ed?
Yeah, all they'd have to do, Drew, is run a general ledger or a trial balance of their last 12 months of expenses in each of these areas, plug that number in, and it would be able to give us a good estimate of what the savings opportunities would be on an annual basis.
Okay, so Ed, that's great. What a great tool. And thanks for sharing that with us. Can you share some example success stories where you've seen these savings realized with some of your clients?
Sure. Here's a couple examples. We had a manufacturing company where we saved them $660,000 on their chemical costs. And that was a 47% savings, and the savings came from their current incumbent supplier. Another example, we've had a reduction of $460,000 in packaging costs, And that was a savings of 15% from their current and also a new supplier. Another example is we found $901,000 savings for a manufacturing company in their MRO, maintenance, repair, and operating expenses. And that was a 22% savings year over year. We had another example recently with a furniture assembler, and we saved them $1 million in their freight. And the large portion of that savings was with their incumbent supplier on their LTL, less than truckload freight. And the other savings came from a new supplier who came in and gave us a good bid on their full truckload freight.
Okay, so those are some really significant numbers. And especially in this kind of market we talked about earlier, many manufacturers are actually struggling from a cash perspective. This seems like one easy way or easier way, to try and adjust, for some of those issues. So Ed, thanks for the overview of the tool and your specific success stories. Really, really important.
Thank you.
If you have any questions regarding the briefing or the tool comparing your annual spend to benchmark data gathered over 20,000 expense reviews, please reach out to us. We welcome the opportunity to speak with you.